It's Brian Preston, the money guy.
Money can ruin your relationships.
Yeah, I think this is one. This is one that if you were to just poll people, hey, what's one of the downsides to money? One of the downsides of wealth? I feel like most folks would come up with this one pretty quickly because you kind of see horror stories of this in the news and with celebrities and with famous folks. It's no surprise that whenever there's money involved, and certainly whenever there's either a little bit of money or a lot of money, things can get tenuous and stressful.
We focused on, I was thinking about this as we were in show note prep. We focused on significant others, relationships between couples. But I will tell you, one of the saddest things that I experience as a financial planner is the residual effect of when families fight over money too.
Yep.
So this is not just for couples. Money can mess up all types of relationships. And we had a pretty shocking stat to kind of kick this off. It was 35% named finances as the primary trouble spot with their partner.
And I think that was one of the largest, and this was data from a SunTrust study.
Yep.
I think that finances was one of the single largest causes of stress in a marriage relationship or a spousal relationship.
And then I thought it was, because that one, by the way, I made them put the word research because that looked like that was this slide brought to you by SunTrust Bank, which kind of scared me, but it was just a research study they had. But then the Federal Reserve Board actually, because the government is compiling data at all times, I thought this was interesting. Mismatches between couples' credit scores can be the biggest indicator, one of the bigger indicators that your marriage or your relationship is headed for a tough spot easily within the first 5 years.
Yeah, now that one, I found that one really, really interesting when we were kind of talking about that, because that's not something I immediately think of. Whenever I'm talking to have friends getting married, or when I'm talking to clients or thinking about getting married, I never really ask them the question, hey, have you guys done a comparison of your credit scores? That's just not something, but it is interesting if you think about behaviorally. It probably does tell you a lot about the behaviors and actions of the person that you're going to join into this long-term commitment with.
There's a reason your insurance company bases a lot off of your credit score. So it is one of those things that I thought was interesting when I was doing data research for the show. Divorce. But we talk about all the time that the quickest way to lose half of your net worth is to go get divorced.
Absolutely.
But there's actually, now this data's got a little age to it, because this is from the mid-2000s, around December of 2005. There was a study from Marriage and Divorce's Impact on Wealth. This didn't say 50%. What did it say the actual wealth impact was?
It says the average wealth drop is actually 77% as a result of divorce. So
attorneys must be expensive.
Not only do you lose half, but then you pay what you have left. It's just not a wonderful endeavor. If you're thinking about wealth building, this is the exact opposite of that. So you just want to make sure that as you build resources, you build wealth, you understand how it can affect relationships.
So let's talk about how you can ensure. These are the Money Guy tips to get you through all these issues. The first one is, I want you to control and focus your inner voice. Now, look, you're like, what the heck is he talking about? We all do it. You're not a weirdo that you have something that goes on. You're constantly talking to yourself. At least I hope you are. That, or I'm cray-cray.
Or either you're the only one talking
to
yourself.
But I'm hoping that most of you guys talk to yourself a lot more than you even probably realize. And you don't, that we talk about the invisible hand of success all the time on the show, is that you got to wake up that invisible hand to get you from destination A to B, and B is where you want to be. And literally. So it's one of those things that inner voice is so much more powerful. It works with money, it works with your success in your career, and it definitely works in relationships. So you have to focus on what that inner voice is saying.
And one of the greatest pieces of advice you ever gave me, Brian, you gave this to me when I first got married, and I was talking to you about, because when you get married, it's just unique figuring out how to live and work with someone else. And you said, here's what's really interesting about the inner voice. Our inner voice all has a predisposition. It's either inherently negative or inherently positive, and sometimes you don't get to control where it starts. Right. What you do get to control is where it finishes, and you can actually control what the inner voice in your head is saying. And I think when you reframed me to realize that, it was a game changer that I could actually control what that voice was saying.
Those voices that you're whispering into your own head are more powerful than you realize. So give them credit, Give them respect. Make it positive. Number 2, you got to find balance. I know whenever I see the word balance, when somebody, especially because it makes me think of everybody saying work-life balance. You know, it's so touchy-feely, and it's not really, because I'm an analytical thinker on things, but it really is. And Bo, you said this, don't prioritize career advancement for yourself over relationship building. What did you mean by that?
Yeah, a lot of folks, they will go try to conquer the next mountain, try to conquer the next hill, try to go achieve the success, go do the next thing, not realizing the collateral damage that relationships, whether it's significant others, family, children, whoever it may be, that they're leaving in the wake. So you just have to be careful that getting to the top of the mountain doesn't force you to sacrifice all the people that are along the journey with you.
I'm going to go ahead and blow up something, put it out there that is, you're going to see it's a theme throughout this show, because I want everybody to know having assets does not complete the fulfillment cycle. You don't get fulfillment from having assets. That's what people get so lost on. And then later we're going to share that it's not the money that creates the fulfillment. It can provide some form of happiness.
That's right.
I don't want to miss it. I'm not saying being broke is good, but you just need to figure out what the relationship is. And that leads to number 3 on these Money Guy tips is relationships matter. What do I mean by that, Bo?
Yeah, so there was actually a study done by the University of Chicago's National Opinion Research Center, and they found that folks who have greater than 5 close friends, like really close, intimate, I'm going to call them best friends, they tend to describe, they're 50% more likely to describe themselves as very happy than those who don't have those close, intimate relationships.
So imagine that. Herd humans, because we all, let's face it, why do stock markets perform the way they do is because humans are herd animals. If y'all didn't realize that, we're no different than the zebras, the gazelles.
You always say we're all sheep.
I mean, with sheep, that's even better, is that you will follow, the sheep will do what everybody else is doing. So it makes sense that we like to be around people. Relationships definitely matter. And I thought this was, actually I pulled this stat out last night at the Chick-fil-A drive-thru with my wife. And she was like, oh, that's so sad. But it was 40% of married couples are very happy. 25% of never married couples, or never married people were also very happy. So there's already over half of the glass is negative.
That's right.
People. So you need to figure out where you are and understand the value of having relationships. And that leads to number 4 is you've got to have a written plan. And it's better if it's a joint plan with your significant other.
This is one of those things, and we've talked about this ad nauseum, that we said all the time, like if you have a goal, write it down, write it down, write it down. And we all hear that, but we don't actually do it. How many times have you actually sat down with your significant other or someone or a partner or a business partner, whatever, and actually written down what your joint goals are? It's amazing how that single step can reframe the voices in your head and the actions that you take to implement your financial goals.
Well, the whole thing about it being written, if you think about it, when I hear somebody talk about what they want to accomplish, that's what, if you think about a comic book, graphic novel, it's always it's a bubble that floats above your head. So dreams will float away unless you have to put a string on them to bring them, ground them a little bit. And that string is goals are recorded and measured. You need to be able to come back and look at them. And then here's the thing on why I said it's better if it's a joint plan is that I'm amazed, like even in pre-show prep, on their next point, I'm going to be sharing a story that I thought everybody knew. And you're like, I've never heard that story. And I was like, oh my goodness, I can't wait to share the story. So that's coming up. And it's one of those things where I think that happens in relationships, is that you have a goal, a desire, you have a plan that you are working on for your family of where you want to be. But if you don't include your significant other, if you don't include family members, they just don't have the knowledge. And that's going to create conflict. That's going to create strife. It doesn't help you reach the goal. And let me give you a perfect example. I recently confessed in a show that the reason we don't have Tightwad Nation anymore is I'm kind of no longer a tightwad. Yeah. I'm still good with money. Don't mishear me. It's not like I'm out there setting it on fire. But it is one of those things where I had a conversation with my wife when we were in our 20s and 30s. I said, look, if we will just do it, live it tight, make sure we're still creating memories, but I want us to be very disciplined and regimented on where we're saving 20 to 25% for the future. I promise you, my commitment is if we do this, we will set ourselves up to where we will have the better life later we're now reaching that fulfillment of that discussion. And it helps. So that's what I'm telling you. If you have a written plan, if you have a joint plan where you're discussing this, go on a date night and do your favorite vacation spots or create a 5-year vacation dream list. All that stuff makes it much more fun. Bo, you were talking about, I remember when you first got married, you said on the flight on the honeymoon out, y'all were going to have a financial
budget
meeting,
conversation.
a budget
What else would
discussion.
newlyweds talk
I
about?
imagine you and your wife still kind of are doing plans so you turn those dreams into reality.
And what it allows you to do too, Brian, is it allows you, if you have the joint goals, then you can share in the sacrifices. I see it all the time where one spouse might have the goal of being financially independent, but if that's never communicated with the other spouse, this spouse doesn't know why every time they go to the store, they get yelled at, or they have to turn in receipts, or they have to focus. If you don't both understand the goals, you don't really both grasp the sacrifices, and you have to be on the same page on both of those for it to work well.
And the last, because it ties into that, though, if you have a goal and a plan, you won't hyper focus on the stuff that doesn't matter. And you said something, number 5 I had on here, don't be a miser. There's a reason that we have Scrooge McDuck, that we have Ebenezer Scrooge and other things, is that there is a persona of people who get their money. I'd even say Gollum from Lord of the Rings, and the fact that, mine, it's just that my precious.
I knew he was going to do the freshest one.
Well, yeah, I mean, it is one of those things where I want you to understand is that if you're so rigid on the goal of being rich, if that is your why, you're screwing it all up, because what it's going to do is and you just said it in that last, because I had a friend who confessed that him and his wife were having some issues, and one of the big driving factors was, even though they had reached some financial success where there was more comfort financially, he still had his wife giving him every receipt when she went to the gas stations and everything, because he wanted to log it, he wanted to put it in his spreadsheet. He was creating a nightmare where his wife felt like he was being very controlling. And I think that's something why you have to be very careful with, because you will literally drive your loved ones crazy if you don't have a plan that doesn't, that it makes it reasonable.
That's exactly right.
And this is why we talk about forced scarcity. What I prefer, budgeting is only supposed to be a temporary period thing. After you graduate from budgeting, you go to forced scarcity. We have all kind of shows and resources on that. I don't have to beat on it too much, but it is one of those things. You should be graduating from budgeting so you don't have to track every little thing and driving your spouse crazy. And then the last thing is, all work, no play makes Jack a dull boy. This is one of those things, you got to build memories. You do not want to make it through your 20s and realize all you did was eat Doritos and, save money. That's not going to be a great thing to tell memories. Memories do blossom. They don't diminish. They actually get better over time. So make sure you are building time to having a purpose for that hard work.
The one disclaimer I'm going to throw on that, because oftentimes when we say that, people mishear that. And if they go, well, I'm going to go do all these things in my 20s and have all the experiences, there is still something to deferred gratification. And your experience, just like your financial circumstance graduates, so too will your experiences graduate. You might not aim to be doing the things in your 20s that possibly you should wait to your 40s to be doing. It's just nice to keep that grounded, sound mind in place.